There is a wave of companies leaving Germany. As a stock investor, you may ask what is happening with the Germans and why lose companies the confidence to continue their operations in Germany. Today you get a view from the perspective of a German inside the country to understand what's going on in this country, which has been in the past one of the most successful export nations of the world and seems to be in the decline in recent years. So stay tuned. As a stock investor over 25 years and living in the middle of Germany, I will take a look at the latest developments in my country and how they will affect your trust in investments in German companies and your strategies as a stock investor. I do this take in English because there may be also some people outside Germany wondering what the hell is going on in this country. If you are interested in more videos with these topics, don't hesitate to subscribe to this channel. So let's have a look at the actual problems the German economy faces. Germany is the only one of the developed countries which has a shrinking economy. 2 out of 3 German companies have at least partly relocated their operations abroad because of Germany's ongoing energy chaos, says consultancy firm Deloitte in this article. Previous reports showed almost half of the country's small to mid-sized companies were considering moving abroad or stopping trading entirely. According to Deloitte, 67% of Germany's companies have moved at least some operations abroad. Most businesses cite high energy prices and inflation as their reasons for moving. Things are worse in Germany's mechanical engineering, industrial goods and automotive sectors. In these industries, 69% of companies have relocated their operations to a moderate or very large extent. Most of these companies plan to move low-skilled component production overseas, while a smaller number also look to move high-skilled production processes abroad too. So far the statement of Deloitte. Let's have a look at the causes of these problems in Germany, which led to the decline of the economy and made a growing number of companies not only think about leaving the country. Let us start with the elephant in the room, the rise of the energy costs. Several factors led to high costs for energy in Germany, which made it difficult in the first place for some high energy consuming industries to produce at reasonable costs. First to mention is the cut-off of gas imports from Russia in the context of the ongoing war in Ukraine and the change to imports of LNG, liquefied natural gas. It is expected that high prices of gas won't change even after the end of the war. And even if the Germans wanted to restart imports from Russia, they won't be able to do it because of the damaged Nord Stream pipelines, which is of the European countries in the first place a great burden, especially for Germany, because we depended highly on Russian gas. Another point are the German energy politics with their switch to renewable energy with wind and solar power. Due leading to an unstable power production, Germany needs to provide an expensive backup with coal and gas power plants all over the country. And even when in the more windy northern parts of Germany in some weather conditions wind energy goes up, the German government seems just to have forgotten to pave the way for sufficient power lines into the middle and south of the country. It is not expected that this can be changed in a rapid pace because of the well-known bureaucratic hurdles in Germany, which slow down the planning and even the building phase of greater projects like overland power lines tremendously. In the end, the costs of energy will stay high in the next years. The problems are even aggravated due to some very controversial political decisions the German government made. So Germany didn't hesitate to close down their last remaining nuclear power plants, which provided CO2-free energy. The missing energy has to be replaced with energy from coal and gas, which is, as you know, much worse if your goal is the reduction of the CO2 emissions. The high energy costs are especially a problem for companies with a high demand of energy like mechanical engineering, industrial goods and automotive sectors. Fun fact is that at the climate conference in Qatar at the end of last year, most of the countries proclaimed that they will do the opposite of Germany and build some more nuclear power plants in order to reduce their CO2 footprint. Another crucial problem is the German car industry, which was market leading in the past, but now faces more and more problems with the change to electromobility. The leading position of the German car manufacturers in combustion engines technology seems to have been lost to American and Chinese manufacturers, with the switch to electromobility as the selling numbers of cars with combustion engines melt away. To make the problem even worse, China has a big advantage with their leading position in battery development and production of rare materials. And China will embrace the cost advantages coming with these factors in order to level up their market position. Next point on the list is the shortage of skilled workers in Germany, a problem which will get bigger and bigger when the large boomer generation will leave the companies and generate a growing demographic imbalance. The ongoing wave of mass immigration wasn't able up to this point to relieve the shortage of skilled workers. This problem will increase in the upcoming years and shouldn't be underestimated because one of the big advantages of investing in Germany for worldwide operating companies in the past has been the well-educated workforce. And this workforce will shrink year for year in the future. This problem could be managed with attracting well-educated people from other countries of the world who look desperately for better working and living conditions. But not only the difficult German language is a disadvantage, also the high tax rates in Germany push immigrants to other countries with more attractive tax rates. And from the view of an immigrant, there are many countries to look at if the part of your income the government takes is indeed important for you, having in mind that Germany has one of the highest tax rates in the world. It is expected that there isn't the will to change this in the future in the German government in order to attract more qualified immigrants. Although the government made a step to immigrant-friendly immigration law for skilled workers, even after that, other countries look quite more attractive. Now you may know something more about the bunch of problems the German economy faces, and we should try to answer how German companies will react to this constellation and how safe it is for a stock investor like you to invest in German companies. As a stock investor, you are usually interested in the bigger and well-known companies in the stock indexes like the DAX and the MDAX. In order to reduce their costs for energy and to circumvent the shortage of the labor market, these bigger companies will dispose their production facilities to outside Germany into countries where the key factors can be found more suitable for cost-effective production. This has just started in Germany with main emphasis on the companies with high need for energy and will accelerate from there in the upcoming future into the broader economy of this country. The solution is on the other side not suitable for smaller companies in Germany. You can expect that there will be growing numbers of total shutdowns of companies of this size. So you should think about the risks of investing in smaller companies, and the best thing you can do is to avoid buying stocks of companies which are too small to evade the costly production in Germany itself. This goes especially for companies which also sell all their products in Germany. The smaller the budget of German consumers gets due to the declining economy, the harder it gets to maintain the company's revenue. Here now are my final thoughts. Best advice for stock investors will be that you suggest investing in companies which produce to a larger amount outside Germany. And this is as important, sell their products to a larger amount outside Germany. This applies for most of the companies in the DAX index. Many of them are German corporations only on paper and don't have strong ties anymore to this country, operating more and more all over the world. You should also keep an eye on how much energy for a company's production in Germany is necessary and prefer industries with low power consumption. By the way, never invest in a company like the car manufacturer Volkswagen, where the German government has a substantial amount of influence by owning a part of the firm. You can expect that management decisions are not all the time driven by what's best for the company, but what fits in the political agenda at the time. And because politicians are usually in no way good managers, you should avoid this type of companies. So that's it for this time. If you enjoyed the video, don't forget to comment, like and subscribe. See you next time. Have a nice day and take care.